these are all things we need to know to assess the project. But we have multiple funding sources and ways to put these capital stacks together. Obviously, they can get completely complicated when you're getting tax credits and things like that. But in general, we can usually have a pretty good understanding of what our best options are, with an initial phone call.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello, and welcome to another episode of the Investor Financing Podcast. And I'm your host, Beau Eckstein. And on today's show, we're going to take a quick deep dive into construction financing, specifically for multifamily projects. So what are your options when doing ground up projects? What you should look for, how to build the team, and so forth. So initially, our first conversation is going to look like a brief description of what you're doing, what you're building. I'm building 15 fourplexes on one parcel in this city, in this state. What's the entitlement status of the project? We're about ready. We're shovel ready. All we have to do is pull permits, or whatever stage you're at. These are the questions that we need to know when we're sizing up your deal, figuring out what the best capital stack for the project's going to be. Location, the project description itself. This particular deal we're talking about, a hypothetical deal. The developer is building 15 fourplexes on one parcel. The total cost of the project is $8.9 million. So kind of walking through the process of what your options might look like. First, we got to take a deep dive into the sponsorship team and the project itself. Who are the sponsors? What's their experience? Have they done ground up before? What kind of real estate holdings do they have? What's the net worth of the sponsorship team? That's kind of the deep dive. We're figuring out, okay, is this going to qualify for bank or credit union construction type of financing? Or is this a better fit for a private debt fund? Or potentially, are they super experienced and it's a big project and it makes sense for doing a HUD construction loan for this multifamily project? Or can we pair CPACE and a bank or a debt fund together? So there's options. There's multiple options on funding these projects. And then also, too, it comes down to timing. When do you want to break ground? What's the expectation? Because if you're going HUD, that might take a year to go through the approval process, right? So if this is like, well, I'm a month away from being able to pull permits to break ground, then most likely we're looking at a debt fund that can move very quickly. And so as developers and sponsors, developers know that, hey, there's a premium if I go with a debt fund, but there's less red tape. So it really depends on the project, the expectations of the sponsors, the developers. So when we're putting these packages together, it's really about an introductory call to kind of go over the project details, to go over the experience of the sponsorship team, who's signing, net worth, and then is this a phased project? Are you doing it in 2 or 3 phases? Does it make sense to do it all at once? Is this going to be a build to rent type of product, or is it a build to sell product? We have developers coming to us for traditional one building type of 152 unit apartment complexes, 52 unit apartment complexes. Then we have kind of these build to rent models we're seeing where they're building bungalows or they're building SFR, single family homes to build to rent. And then we're figuring out, does it make sense to try to find a construction to perm type of loan, or should we go with a debt fund, get the property built and stabilized, and then we're going to create a ton of value and then we refinance it to long-term debt.
Attention business owners. Want to grow your profits without any extra work? Focus on your expenses. Save up to 25% on your business expenses without switching vendors. Our partner platform uses data to manage and reduce expenses through benchmarking. Through our partner's proprietary $6 trillion data lake with expense data for millions of companies covering thousands of categories, we are able to continually find savings for your business. Our team then renegotiates with existing vendors and put in place meaningful, lasting cost reductions. After that, we monitor and report those savings. Our algorithms continuously identify new areas of expense optimization and performance improvement that can be activated at any time. Learn how to save money on your business expenses today. Visit expensesavvy.com.
So oftentimes you'll see that it makes sense to maybe use bank or bridge construction financing to build the asset and then do a takeout into HUD if it's going to be a long-term hold. HUD is really good for these long-term holds because on a refinance, you can do a 35-year term. It's a complete fixed rate versus having agency debt, which might be a 5, 7, or 10-year fixed amortized over 30. But those agency debt might be an option because you want to sell year 4 or 5 or 3. So we got to figure this all out. And sometimes we go, hey, we're okay signing a guarantee. Let's do a bank or credit union deal because sometimes credit unions have very lenient prepayment penalties. So these are all things we need to know to assess the project. But we have multiple funding sources and ways to put these capital stacks together. Obviously, they can get completely complicated when you're getting tax credits and things like that. But in general, we can usually have a pretty good understanding of what our best options are, with an initial phone call. So that being said, feel free to book a call below. I'll be happy to discuss your financing needs. We do everything from multifamily to hospitality to short-term rental properties to single-family construction loans. We are geared to help the business owner and the real estate investor. Anyways, this is Beau Eckstein with Investor Financing Podcast, and I'll see you on the next episode.